Morning, guys. This is Trader Genius, and my name's Rob. This is a tradisode, an opportunity for us to sit together and watch the live market open up. The stock market, New York Stock Exchange, opens up at 9:30 Eastern Time, and I'm out here in Mountain Time, so it's a little bit earlier for me, 7:30. But you get up, you get prepared, and you get ready to engage with the market. And you need to be in the right mind space to be a day trader. I day trade options primarily. That's my number one source of income. To fuel my lifestyle, I do some stocks and ETFs on the side, but this is my main focus. So you got to show up ready to go, and you got to do some homework. So dedicate some time to getting ready for the live market that day, checking the conditions. You would do the same thing with the weather, actually. It's a little bit chilly this morning here, and I opened up the door, and my dog just gave me that look, like he didn't want to go out. It's too cold. We had a cold front move in. But that's the same thing that I do with my market conditions. So I stick my nose out there and check what's been going on overnight. There are some traders and individuals, institutions who have access to overnight trading, and they can move your stock prices on you while you're asleep, if you're here in the U.S. like me. So, for example, we had a lot of buying happening overnight last night, and a lot of these prices got driven up. Let's see, NVIDIA had a $15 gap up on a $600 stock. It's pretty significant. Amazon is a little pricier stock, but this one gapped up $38. And a gap just means, hey, on a daily chart, between yesterday's close, so you can see on Amazon here, I'll expand it. Amazon closed yesterday at the bottom of that candle around 33.40, and it gapped up today to open at the bottom of this green candle. So what does that look like? Well, the opening price is $33.70, so $38 more. So if you bought at the last second of market yesterday, 4 p.m. Eastern Time, and you woke up today, hey, your Amazon position is doing well, especially if you were in an options trade. However, if you had a put and you owned that instead of a call, you'd be really, really upset. So I don't hold any of these options overnight. You guys see me, I'm in and out within a couple of minutes, and I just want an exceptional move. We have some really strong buying happening on Amazon here as it approaches a big price point. It's a little bit early for my process, but this is the kind of behavior I'm looking for and looking to trade. Strong wave for me to surf, get on, get off within a couple minutes, and I'm done. But I'm not looking to hold overnight because of that crazy, lack of, it's basically giving up control over my trading decisions and over the success of my trading business to a bunch of strangers who I don't know and have their own motives. So it's not in my best interest, and I'm not saying it's not something you can do. You can hold longer term options, you can hold overnight, but acknowledge the risks, measure the risks, get to know the environment before you start doing that. Just a kind of a word of caution on that. Holding overnight trading can move markets pretty seriously, as we see today. So let's check out these indexes. Getting close to my opening of my trading window. SPY, yeah, 52-week break above right there. You're witnessing it right now. It's making yet another all-time high. Let's see what QQQ is doing. Its all-time high is right up here around 341. So we'll watch that closely. Who was moving overnight? NVIDIA was moving, and there's some buying happening early. It's finding some resistance around this ceiling RB. Quick check on those other two indexes. IWM actually came down the first few minutes, and it found some support there, 224 in the benchmark. And Dow Jones cycled up, down, big down, and then now it's back up again with less volume. Let's check out some of the other movers. Zoom, nice big fat candle right here at 935. So let's see how that follows through. We don't have much market support. It's a little bit early in a jumpy market, so I'll use my little mock trade control click right there. Some of these stocks are moving up right now, some are moving down. So Zoom might take off and go touch 340 right now, but this is too risky that it's the end of the buying. So I'm going to let that one go, put a little marker there to do a mock trade so I don't actually have to risk money on it. I just get to see what the results are, and if it sets up for a good profile of a low risk trade later, I'll get into it. Here goes NVIDIA. Nice breakout profile. We do have a little bit of green market support. The indexes are moving up. In fact, Dow Jones is going. NVIDIA finding resistance at that 636.04, that RB line. So we'll see if it can pop out of there. Quick check on another mover here, ROKU. Big splash of a volume spike, pushing it above 385. Got some more green showing in the market. So let's get in there and we'll roll with ROKU and these nice strong indicators that are signaling, hey, there's some buyers there. So we'll see how high these buyers can push that price. Volume spikes tend to start and end runs, and this is definitely a departure of the behavior from before. Although it had been creeping up, this is a new set of behavior. So we'll see if this bull market and ROKU's buyers can push that price up, break through that 385, and watch it carefully. It's getting a little flutter here. My indicators look strong still. So we'll stay in this ROKU move. Nice upward price action. Getting some sellers right there at 385. And there is a Y point that came on. So we'll be watching that vigilantly. We're about a minute into the trade. And the buyers are still buying. So a little bit less of a powerful candle here on the second minute. But we're getting some follow through on the buying, which says, hey, stay calm, your indicators, trust them, you built a system around them, so watch them. They'll tell you the real story. Don't go off of what you think's going to happen. Go off of what's right in front of you. And right there, we get the push through, and we're out of there. So I've exited my ROKU position, showing about a 5 or 6% gain, and I'll take that pretty much each and every time. That's a clean single. So clear change in behavior. The buyers come in, big volume spike, and I'm in there the second minute or the second candle to mark this trend. That's fine. That's fresh enough for me. Had a little bit of green market support, not overwhelming, but good enough to power it through. And ROKU had some fantastic indicators showing me, hey, bullish, bullish, bullish. The flutter at 385, no, I don't like seeing that, but that's to be expected. That's what happens when you enter right around a possible ceiling, and it just needs to prove itself. So the buyers were there, they come in, the indicators did their job, told me the story that it was low to moderate risk, and boom, it takes off, and I get out, in and out at the right timing. And certainly before this big sell-off happens. So the volume came in a couple minutes later again, so basically a 3-candle trend here. If you started counting back here, you're probably a pretty conservative trader, so you probably would have stayed out of this one. But I've got some pretty badass indicators. I'm not going to talk about them here. We got some geniuses who will talk about them in another video if you want to watch that. But we use them. They're called genius modes, and they're pretty badass. But they're simple tools to use. So those told me all I needed to know with this ROKU move. Just a quick in and out, bang bang, and you don't want to hang out. Even if ROKU, here in the next couple minutes, 9:45, it's up at $390 or $400 per share. Yeah, you could have made riches out the wazoo, but that's not what I'm in for. I'm in here to take a bite. Like I said, look for a good wave to surf. I like the way that this wave set up. It's part of my practice, part of the way I've been trading for, 4 or 5 years now. It's 2021 already. So this is just a quick demonstration for you guys out there. Number one, like I said, check the environment. Check the area you're going to be going into. Use surfing as the analogy. Surfers don't normally just show up and jump in the water without checking what the ocean conditions are. They're going to check the surf report. They're going to stand on the shore for a minute and say, okay, these swells are showing up pretty well. The sets are nice. I can get in there and get some good surfing this morning. But if it's all, these waves are falling over themselves, they're kind of tumbling, and it's all white caps, yeah, you might just pass for the morning. Go for a jog or get a coffee instead. So same thing. We had some good, strong buying overnight. I talked about those overnight gaps. ROKU here had, let's see, it went up $7.33 overnight. So that is pretty important to know that there were lots of people buying this stock overnight. It doesn't necessarily mean it's going to continue in a bullish direction this morning, but you watch the behavior, and you're basically just reading buyer and seller behavior like you're reading the ocean if you're a surfer. So check that out. Do your pre-market analysis. Don't get lazy. No shortcuts. We'll be talking about that soon in some of our videos. Shortcuts are probably the number one way to sabotage your own trading system. So don't be lazy. Check the market conditions before you engage with the market, especially for us day traders. And it's a mindset thing. So I talked about keeping that calm. There's one of the hardest things to do as a trader, and it takes repetition and lots of attention and reflection, as my good friend Jess says, to tease out the difference between flutter and a reversal. So I'm sitting here, I'm in the trade. It's kind of, you watched, it's struggling with that 385 mark. It crested it once, but then it was kind of trying to beat it again. That is flutter. And if you're just watching the gain loss, my gain loss was fluctuating between like a minus 1.1 and a plus 2. If your mindset is, hey, there's money in that trade, I'm chasing the money, which don't act like you're above it. We're all victim to that because we're all here to make money. But if that's where your focus is, then you're not going to be watching the indicators telling you the clear picture. So if that's the case and you're trading scared, you might exit on that flutter and just be like, I don't know. Or maybe if you're just a very, very low risk trader in this part of your process, you'd be out right there with a teeny tiny gain or a small loss. The indicators tell you the story. So de-emphasize the results and keep your focus on the process. Watch that market support. If it had turned here to a minus 17 on my market meter instead of a plus 12 or whatever the heck it was, then that would have been really good grounds to get out, especially if we start seeing red candles show up and the trend is getting late. But got in on the second candle and out here on the third candle before it didn't make its high before I was out. You guys saw that. So be decisive. If you're trading scared, the remedy, the old prescription from Dr. Rob is more practice, more familiarity with your rules. Make them second nature and make them simple to follow. Just be like, okay, these are my conditions for entry. These are my conditions for exit. It really is that simple. Even as a day trader, or whether you're trading stocks or crypto or something for a couple minutes to a couple days, couple months, couple years, have clearly defined rules for your entry conditions and your exit conditions that are in line with your risk tolerance. And then practice the hell out of them until they're basically baked into your behavior. And as my coach and really good friend Steven would say, you're not practicing until you can get it right one time. You're practicing until you can't get it wrong. And, that can be taken out of context, but basically you're doing what, let's say, unfortunately, he keeps popping into mind, but he's all over the news. Tom Brady, he's got a bajillion Super Bowl rings. There's a reason for it. It's not because he's like some Superman. He's not a stallion athlete, but he's practiced his quarterbacking to the point where he just can't get it wrong. It doesn't mean he's not going to throw picks and get confused by coverages. That's not the point. The mistakes will happen, but let them happen organically. Don't create your own mistakes by sabotaging yourself and playing quarterback scared or trading scared. I remember Derek Jeter, he never looked intimidated in the box. When he's up to bat, he's just looking to put the barrel of the bat on the ball, waiting for his pitch and to do something with it. So take that mentality, keep practicing until you can't get it wrong, and it's just second nature to execute your process the right way. And hopefully you have happy trading. Hopefully that kind of mindset work helps you. I guess the third thing I'd say is log your trades. It's just like Brady or Jeter watching film of themselves executing their job and putting a swing on a ball, or reading coverages and hitting the open man. It's the same darn thing. So you can record yourself just like I am right now. A lot of traders in Trader Genius are coming around to start doing that, and it's really helpful because you get to see your facial expressions. You get to see just how far outside your process you might be, how and where the emotions might be coming in, and that's the first step, is getting that awareness, and then you can work on it. Then you can start to condition out the bad habits, the bad behavior, and that's when you're only left with the good, right actions at the right time. So take that into consideration. Hopefully you do your pre-market analysis. You have that calm mindset of a professional who's just there to do one simple job, and you're able to give yourself some feedback in order to get better. And after you get to a certain point of competence, your confidence is also up, and it becomes stress-free to be trading. Don't fall in love with the paradigm of the day trader must be a gambler and must be neurotic and caffeinated. I know that's not good for me, but that it must be a high stress affair. Nope. Day trading doesn't have to be that way. You don't have to do what all the rest of them are doing. So choose to be different. Take those three things into account, and hopefully it boosts your trading and makes you more effective over time. Build your trading system until it is effective consistently. That's your goal. All right, guys. See you in the next tradisode. Take care of yourselves. Happy trading.